So this is a continuation to my previous video. If at all you didn't watch the previous video, you can go back and watch it. But if you can't, I'm going to explain to you a few concepts that we were talking about in the previous video. So in the previous video, we talked about market structure, break of structure, origin of the break of structure, liquidity, and imbalance. So I'm going to explain to you all those concepts here on this chart. So this is a break of structure here, this is liquidity, and this is the origin. You can call it an order block or demand zone. So this is a trade I took on gold. As you can see, this is XAU USD, and I'm going to take you through how I was able to take this trade. So as usual, I wait for a break of structure. I had to wait for market to come and liquidate all these lows that it was, these fake lows that it was making, going back. Then it had to tap. After doing all that, it finally had to come and tap into my origin. Then it ran straight to take profit. These are the trades I usually take. You wait for the origin or the demand zone to be mitigated, then the price runs straight to take profit. This is a very simple strategy, guys. So the same strategy is working every day and on every pair. Let me show you another setup on GJ so that you can prove that the strategy is very fine. So this is a trade that I just hit take profit a few minutes ago. So as you can see, I waited for a break of structure here. This was the last break of structure. Then I had to go to the origin that caused the break of structure, which was this one here. Then I had to place my order, and as you can see, the origin had liquidity. Where is the liquidity? The liquidity is here. This fake order broke here. As you can see, price tried to react to it, but it didn't. So it had to come back and liquidate all those buyers who had bought from there. Then it had to respect our order block. So as you can see, this is a very simple strategy, and if at all you can first backtest it and see if it works for you, then you can start using it. But this strategy is very simple and it is very smart. As the word says, it is smart money concepts. So first of all, you have to look for the market direction. This was an uptrend, so I first waited for market here, but it didn't. So when it broke structure, this is a break of structure. I will make a full video about market structure, explaining to you everything you have to consider before calling something a break of structure, or before calling it an order block or a fair value gap. I will explain to you everything in my price action video that I'm yet to make. So let's go back to the gold chart and I show you something. I'm going to show you what a fair value gap is. For those who don't know what a fair value gap is, a fair value gap is this gap here between the last candle after the consolidation. Let me first delete this. Between the last candle and the third candle after the consolidation. So this is the fair value gap here, right here. That is my fair value gap that I considered before taking this trade. And the trade had, let's go to our checklist and see. Market structure, yeah, we're in an uptrend. This is a break of structure. We consider that an uptrend. Then break of structure, yeah, it is here. This is the break of structure. Origin of the break of structure, it's here. This is the origin of the break of structure. Liquidity was present. This is the liquidity. Then imbalance, the fair value gap or imbalance is here. here, right there. The gap between the third and the first candle after the consolidation, that is a fair value gap. So I had to enter my position there, waited for it to be triggered, and the trade had to run straight to take profit. So guys, this strategy is a very simple strategy and a very good one. It is giving me results. That's why I decided to share it to my friends so that they can also benefit from it. This is also a break of structure, and this is an origin of this break of structure. So sometimes price comes back to your origin, sometimes it doesn't, but all you have to do is to be patient and wait for. If it doesn't, you wait for another break of structure. Like here, you say I had to ignore this because market had to make a pullback, and for a pullback to be considered a pullback, there are some things we consider. This is a pullback because it has 3 candles closing and opening below each other. Then it had to break. It had to break structure. So after this pullback, I had to ignore this origin. Then I considered the origin that caused another break of structure, which was this break of structure. So this break of structure. So I considered this origin and I entered my trade here. So after getting triggered, I had to enter my position. So in forex trading, you have to be disciplined, fearless, and consistent. So guys, jumping from strategy to strategy doesn't work. You just have to get one working strategy that works for you, and you use it. So as you can see here on gold, I'm going to give you a live signal. Those who trade gold, this is an order block here, and this might be liquidity, by the way. So let's consider the last pullback. As I told you, this is the last pullback, is the last candle before the break of structure is this one. So all this might be liquidity. Let me delete this. So this is the break of structure. As I told you, you have to first have a break of structure. This is the break of structure. This is an order block here, the origin. This is the origin, call it an order block. And this is trend line liquidity here. This is the liquidity. So market has to take out, as you can see, it is coming back to take out all the liquidity. So once it comes back to my order here, when it comes back, I know it will come making double tops, and that is the liquidity I want. So it will come back, mitigate my order, and immediately it will run to take profit. I'm very sure about that. So can consider this trade here, a buy on XAUUSD. This is a very good trade. I think it is a 1 to 4. 1 to 4 risk to reward trade. This is the same strategy I use, and it is paying, guys. So you can also consider using it. So thank you for watching my video to the end. Subscribe to this YouTube channel for more valuable content like this.